Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, December the 23rd, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. This is again the monthly chart. High level overview. Wave 1 is done. We're working on this wave 2 down. We've been talking about this for the last multiple months. When we got this initial swing point low here, we said that it was very unlikely this was going to be over and we were ready to go breaking out. We talked about making a lower high, lower low. Therefore, we did make that lower low. And ever since this low, the last couple of 3 months, we've been talking about it, saying the same thing. Again, I don't think this is the wave 2 done here. It's going to go and eventually break out, but I still think it's going to go lower. The question is, where do we end and finally go breaking out? Is it going to be here, somewhere a little bit lower, or do we eventually go all the way toward our 3-year plus target of 80? We shall see, but just remember that at some point, wave 2 will end, and we're expected to go breaking new highs above that 114.72. Fair enough? So why do we think this is very low probability over here and that this is the beginning of a breakout going higher? Because of price action. Since this low, overlapping price action we discussed in great detail. Jump over to the charting platform. We can see what we're talking about. From that prior low here, this was the previous low. We made a new low, not by much, but still made a new low. And from that new low, we see this overlapping. We went up, pull back, went up, overlap, overlap. Went up again, overlap, overlap. Kept doing the process. Went up, made another high, overlap with the prior high. So typically when you see a bottom reversal, and this is say that wave 2, and we were ready to go breaking out above that 114.72 and higher, you typically get a 5-wave move followed by a 3-wave correction. And during that up move, you don't see this overlapping action. So you would typically see a very straightforward type of move where you'd go up, get a retracement, go up, get a retracement where you don't overlap. You come deeper, but just don't overlap, and then a continuation. And that would be a 5-wave up, followed by a 3-wave correction, then another 5-wave up. That kind of sets the tone of a bottom reversal. Now, we did discuss this because we got oversold here, even a weekly and a daily, started to get oversold. We were expecting a bounce, but we're just not expecting this to go breaking out right now. And since that bounce, price action has shown all this overlapping. So we kept saying more than likely we're going to reverse and start breaking back down. Then we came up to this battle zone, which you can go across all the way across at 98.5 area. It's a big battle zone, former resistance, turn support, turn resistance, turn support. And we said if we start breaking back below that, the probability we go lower is very high. So what did we do? We started with this low to that high. We used the extensions and we did what we call the slide rule here. You would just take that swing point and you go from that low. We eventually broke that 618. We went down to the 1448, 1272. In this area, bounced, but we reached those targets. Then we continued to slide this down. We went over to this section. And from that low to that same high, we broke the 618. We went down to the 1448, 1272 extension. And you can see we've even been lower than that. So the latest one was we moved it to that swing point low. And why is all this important? Because it says we're going to go to this 9660, 9760, 9738, which happens to be below this prior swing point low here to high. Look where that 618 is at 9783. And we get to 9768 or 9738, we're going to be testing, obviously breaking below this level. That then gives us a 75% when we officially close below 9783. Candle body, not just a little dip of a wick, but a candle body, then it states we have a 75% chance we will make new swing point lows, targeting 95.64, and a 70+% chance we're going to go down this 95.11, which again, both of these extensions are a new swing point low. Obviously, we get even one tick below this low, then that wave 2 can't be over here. Got it? So we started the process saying, overlapping price action, be careful. This is much more likely to go breaking a new low, but we need to see price prove its intentions. Just like we did over here when we had that swing point low, we got this move, looked good initially, but then we broke back below the low to the high, that 618 level, which occurred over here. And when we got that, that said we were going to make a new swing point low. We ultimately did make that swing point low. We didn't quite get to the 618, 1448, or 1272 level. They're still en route, which are in very close to this level. So I don't have to draw that again for you, but that was part of the process. Then we got the overlapping price action. We're breaking back down. So we've been talking about this for months. Any big rallies in the dollar should be sold. Any dips on the euro and the pound, significant dips, should be bought because we're expecting the dollar continue to break down and we're expecting the euro dollar, pound dollar continue to break out. Fair enough? So we've been using the software to guide us in that direction. So coming over here to the software, we can see what we were talking about, that my daily reversal, we knew we were going to get that, but then we started slingshotting a couple of times, still went back into this resistance zone, and then we finally turned over. We talked about selling this PAI hook with that little trigger, and we started shorting it, and we're still grinding lower. I had to renew my platform, so it's not running in this one, but I do have the euro and the pound to the upside on these. We're over 200 pips on this, grinding higher. We talked about buying the euro dollar. As the dollar was topping out, the euro was bottoming, and we said, let's buy that PAI hook, aka set it to buy it in advance. We set it in ready to trade mode. The trigger went off. We got in, we started climbing higher. On this one, I got pipped out, and then I went right back in. So we're still up over 200 pips and expecting this to go much higher. We did go the break even +1 route, so you can see we're in a winning trade no matter what. I do expect this to keep grinding higher in the weeks and months to come. That is the plan. Amen? And the same thing with the pound dollar. We're up over 300 pips, same scenario. Bought the trigger, made some pips, got pipped out, got back in. We're in a position of authority, still looking for this to go up near the prior highs and make new highs. So we'll take some profits further up the food chain. That is the plan. but coming back over to the charting platform, my targets are still this 97.68, 97.38 area, which again will then influence, right, Emil? Below that 97.83, which why is that important? Because that is that swing point low, and this is the current swing point high. And when you retrace below that 618 and get a candle body close, so we don't officially have it yet, but that's when I talked about us going below this 98.50. In my humble opinion, if we close below that, that was enough to state the same obvious conclusion that we're going to go make a new swing point low. Well, officially, we've been dipping and we tested it overnight. Came very close by a few ticks here to test it. That 97.83, I believe that was 97.86 there. And this last one, I believe we did actually touch it, 97.85. So we missed that one just by a touch too. And that was 97.86. So we got a new swing point low. We just haven't officially closed or reached our 97.83. So as that bounce occurred, I said, be careful. At most, we might maybe rally up toward the Magic Fibo. We didn't quite get that far, but I did expect this is going to keep breaking down. That is the plan. Fair enough? So that euro dollar trade continues to go higher. The pound dollar trade continues to grind higher. And this dollar index continues to grind lower. Fair enough? So officially, when we get below 97.83, it says the same thing, which I believe, in my humble opinion, closing below 98.50 says the same thing. And where did that come from? Using the prior swing points. We stair-step this thing higher, and we use the prior swing points to then say you break the 618, you go to the 1448, 1272. You go to the next swing point, we broke the 618, we went to the 1448, 1272, these. Now from this swing point low, we're just about there. So again, when we officially touch those, which we still have a 75% chance we're going to go visit 97.68, we have a 70+% chance we're going to go visit 97.38. And by visiting down here, which we've almost done, we'll be closing below the 618 off the low to the high, which again, this is why this keeps reiterating, we're going down here. And even though we haven't officially broken below that, on that recent high to low, when we started breaking this area over here, that set the tone. We were going to go visit these extensions. We did that. We took out that major battle zone. All right. So what does that look like on the euro dollar? Where are some of my targets? I see my targets are 97.68, 97.38, followed then by a close, official close below 97.83. We then start giving a 75% chance we visit 95.64 and a 70+% chance we visit 95.11, which again, both of these are at a new swing point low. So that same picture is very unlikely that this wave 2 is over. Likely it's going to go lower. That's what this is showing. This was the original target, and this is kind of where we are now. So what happens when we break a new low? I just keep moving that. So you just keep moving it lower and lower and lower and lower, and we'll keep reevaluating. James, Emil, Ian, that's kind of the plan. We keep making stair-stepping lower, getting closer and closer to the target. But again, I would be remiss if I didn't remind you, once this 2 is over, wherever it occurs, we then eventually going to go breaking above new highs of 114.72. So that has always been the plan. This top and reversal, which we pegged over 3 years ago, we expected this move to get a deep retracement. We just may not get all the way here. Or possibly we just keep doing it and takes a few more years and we get down here. But that's the original plan. to have a deeper retracement. And so far from the original low down here in 2007 at a price of 70.53 up to the current high of 114.72, you can see those levels. I'll move this out of your way, but you can see those levels. We haven't even did a 50% retracement yet. So typically when these are super cycle wave twos, they're typically deeper retracements. So could it end here and break out? Yeah, it could. I said they're typically deep retracements. There's no rule to say it has to be. So this could end prior to getting to our original target. But typically they are a deeper style retracement. We're looking for a deeper, like a 618 to a 786 type of retracement is what we're looking for. Whether we get it or not, but man, have we been spot on talking about this correction. And even with that low, we said make a new low. We did. And I still think based on a price action, we're destined to go lower. So that's why I keep on the sell side of the dollar index. And I keep on the buy the dips on the euro and buy the dips on the pound, where we were kept doing it. Remember what we did 3 years ago when we talked about the opportunities. And again, no buy, sell, to hold recommendations. I can't tell you what to do. But when you come back here 3 years ago and we were below parity, sitting there at this 0.89 area on the dollar end. No, I'm the euro. I was talking about the euro. But when we were up here at this high level, 114.72, and we're talking about the reversal, we were talking about the euro giving us this great opportunity down here at parity and below, expecting we were going to get a big, huge bounce. And even though we never expected this bounce would turn into new highs, we expected we'd get a very deep retracement, right? So I'll do the weekly and expose that for you. So there's the all-time high down to this low we're talking about. And we're expecting at least like a 618 type of retracement out of this. So back at the time, 3+ years ago, when we were at 0.95, I go, man, this is a huge opportunity to go long the euro dollar, because we're expecting somewhere around a 618 type of retracement, maybe even a little bit deeper toward that 786. So from 0.95 all the way to 136, that is thousands of pips. So we made thousands of pips. We got the pullback to this 102. We talked about it in great detail. There's a great opportunity to buy this and start going long. And each time we get these pullbacks, we talked about let's buy the dip. And the most recent one was this current pullback. And that is current price action. Was this most recent. We got in, made some pips, got pipped out, got back in, and we're up over 200 pips on this next push. And we told you back then that we were going to target the 1760, 1780 area. Well, guess what? We reached both of those. Isn't that a beauty? And before that, this high to that low, we broke the 618 in this area. And we talked about my first target is going to be the 1670 to 1700. We got there. Then we did the slide rule, right? We started sliding from the recent high to low. We did the same thing we did with the dollar index. Then once we got to these targets, we broke the 618 on that next move, which warrants going up to the 1760 to 1800 area. And what did we do? Bingo. We reached it. Isn't that lovely? Now what? Next target, 1820 to 1850. And the bigger move from the recent high to the low, which is up here, we already took out the 6180, man. Check it out. From that high to that low, that 618 level, that's that 1750 area. We said if we get above there, we're likely then have a 75% chance we go into 1980. 70 plus, we go into 2030. And the other day we were above there. We didn't close above. We Did we close above 1752? Yes. Notice the, let's see the close. Let me double check that close. The close was at 1760. 1760 is above the 1750. So even though it doesn't look like it, that's an official candle body, only by a few ticks. But a candle body close above that 618. So ladies and gentlemen, the reason we're long the euro and the pound is because this states right there, that candle body, we have a 75% chance we're going to grind our way up toward 119.80, and a 70 plus, we're going to go towards 120.30. Amen? So that's why I'm going to continue to let this trade run, and I'm going to let it go until it can't go anymore. And this should go to 300, where we are now. That's the pound and the euro. We're in the 200 category, but this should continue to break up. And we said we should go to that 119, 120. We're talking about 200 to 300 more pips. So now you target 400 to 500 pips, extremely likely, 75+%. And to the 120 target, 70 plus plus. So this number should increase to 400, 75% chance. And this increases toward 500, somewhere in the 70+% chance. And I like those odds. Amen? All right. So continue this chop. We're going to grind and grunt and labor and rise. But the plan is to get up here and continue to these targets. Pound dollar is the same. We did the same on the lower move. We broke the 618, hit the extension, come to this one, to high to low. We broke the 618. We're going to 135.38, 135.90. So we're almost there, not quite, but almost. So Emil, we still have a 75% chance we go into 135.38. 70 plus, we're going to basically 136. Why is that important? Because when you get up to those targets, from the high to the low, that 618 is sitting there right around 135. That. And we've already poked above it, but we didn't close above yet. But the writings on the wall were 75% likely. Going up here to 35, 38, and 70+% likely, basically going hunting 136. And both of these targets are above the 618, which again is the same rule that we have a 75% chance we're going to get up here. By getting up here, we break the 618, which then says we got a 75% chance we go and visit 139, and 70 plus, we go visit 140. And notice the numbers, basically at 135, we're talking upwards of 500 more pips. So this trade would then turn into not only 300 pips up, but potentially to go as 500 more, putting us up at 800 pips. And it wasn't long ago we talked about buying this dip down here in the 120s, and already we're up 1,400 pips off of that low, even with the correction, and we're back at it. So there you have it. Keep buying these dips, keep letting your winning trades run. And we didn't care. And some of these we got in, got pipped out, got in, got pipped out. Persistence pays off. And that's what I'm here, God-given talent to read and interpret price, is to help you get into a higher probability, the home of the low risk, high reward, high probability trade, utilizing the software and all of the technical analysis you can probably handle. Ad nauseum, like, Gary, we got it. We're going up here. I see where your target is. Yep. And then we're going to go where? To 140. So I think we potentially could still go higher. These are on-screen programming, so you can always click it and move it lower. If you don't think it's going to go quite that high, click it and move it lower, and notice it changes these numbers for you. So a lot of times I'll actually put in the numbers based on the charting platform in your Fibo target. So if you're scalping this, you could put in these lower numbers. If you're planning on trading this for a lot longer, then you can start putting in the 139, 140 numbers. for those take profits. All right. All righty, let's continue. The euro yen, the pound yen did pop over the weekend going into last week. I kind of expected we might see a little bit more upside. I'm still not thinking this baby is just going to keep taking off indefinitely. We're due for a big retracement because not only is the price action showing we're exhausted after this run, reaching those extensions, but we need a period of pullback. And more importantly, when you go to the software on these, so we'll go down here to the euro yen and pound yen, we're exhausted. Even the dollar yen, all of these are getting exhausted to the upside and likely going to see more downside. So why do we think that? That's because, let me move this all the way over so I can get all of those in my purview. The pound yen, let's start with the euro yen is what we're looking at. Why do I think we're exhausted? Look at the monthly. Monthly's at extremes. Yes, they're still pointing up. So that's why I said this thing could possibly go a little higher. But when you start to see a monthly at extremes, a weekly at extremes, and a daily at extremes, we started doing the same thing. And I did a little short, made some pips, got pipped out, got about 100 pips last week here until Friday. We got pipped out again. So it takes a little battle armor. We always talk about put your battle armor on. It's going to be a battle, and this is part of it. Why do I think we need a bigger pullback? Because nothing goes straight up. You always get these pullbacks. We talk about stair stepping, and now we're stair stepped to oblivion, right? Since these lows, we've been stair stepping for quite some time, grinding higher and higher. And we're to the point where the monthly, weekly, and daily are at overbought extreme. So I typically don't take positions where I'm just going to continue the long upside, expecting this thing just to slingshot indefinitely. And we just keep going higher and higher and higher forever and ever. This is the carry trade. You buy the higher interest rate, you sell the lower interest rate, but the yen is in the process of raising rates, and this picture is about to flip the script that this carry trade will unwind. Not only the technical picture, but some people look at it as well. It's about the interest rate differentials. When you get a big, huge discrepancy, that starts the push of a carry trade, which pushes price higher. That is true. I like that. We did it with the dollar yen. We made thousands of pips. We made a lot of Louisiana lagniappe with the interest. But as of late, I'm not interested in buying the euro yen or the pound yen at these high levels and where your monthly, weekly, and daily are all at extremes. I'm looking to establish a short position. So we went in great detail in the technical picture looking at the pound yen, which is in the same boat. Daily, overbought. Weekly, overbought. Monthly, overbought. And yes, the monthly on both of these are still up. So it doesn't mean this is absolutely the end, but we're coming to a big battle zone over here, that line above just a little bit further. And we kind of expected we might get the pop a little bit higher on these. Check out the pound yen, for example. From the recent pullback where we kind of got a little pippage and then we got pipped out, where did we go to? We went to those extensions and now we're exhausted on that move. And from this prior correction where we made hundreds of pips, got pipped out, got hundreds of pips, got pipped out again, I was waiting for this climb to start turning over. It did on the daily, made a little pippage and did it again. So I got pipped out a few times. What does that mean? That means you get to your position of authority, it goes against you and you make profit no matter what. We got to the break even plus one, And I even took some profits when we were 100 plus pips on this, coming back to where that prior breakout was. Took some profits there. Then we bounced one, yes, again, especially on the Friday. That thing popped and obviously pipped us out one more time. But I'm still looking to establish a short position here. Amen. When do I typically do that? When we get the dailies to start PAI hooking. And we're kind of flat. When was the last time when it hooked? Made a little pippage. Doesn't look like much, but this is a beast. This thing can move from that high was 207 to this low down here was like 204, 205. A couple of hundred pips. It doesn't look like much, but it does. So I look to sell when the PAI hooks and get a little position, get to a position of authority. And then as we continue lower, this thing is likely to break down much further. Now let's go back to the technical picture and discuss, discuss why we believe this is more likely. Come to a weekly view and bring in that price action. And remember, back in COVID, I was the biggest bull of the pound yen saying this thing is due to go up 8 to 10,000 pips. And that we would go and break a new high over this prior swing point. So back in the archives in 2020 down in here, I said this is based on that price action. We're due to grind higher for years, going above this swing point, making a new swing point high. You've been there, done that, because we discussed it for weeks and weeks and weeks. Then all of a sudden we had that back in August of last year. We had this, well, July into August, that is. We had the carry trade unwind, and very quickly this thing lost from 207 down to 180, 2,700 pips very quickly, very quickly. And then since that bottom, Harold, what happened? Overlapping price action. Just like the dollar index was doing it, we kept going lower. This thing is kind of overlapping as well, kind of stating we need another push back toward these lows. And instead of we got a dip, we almost made it, and then we started breaking out. So this, to me, based on this overlapping price action, the bigger move up, this corrective move, which looked very impulsive, this looks like it is, for those of you that like Elliott Wave and price chart patterns, this looks like the A portion of that move, impulsive move down A, and all this chopping and overlapping is just an extended B right there. Expanded flat correction. Why? Expanded flat because we made a new swing point high. So that's what we call an expanded flat correction. And likely we're going to get this baby to come back down in a C. Everybody good? A, B, C. Now, could this thing go a little bit higher? Yeah, that monthly's still up. The weekly's flattening and the daily is flat. So it's possible it could go a little bit more. But that's why I like to get to the position of authority. And if I get pipped out, great. I'll just keep doing it, because eventually one of these is going to start getting in and go hundreds and hundreds, even thousands of pips lower, as I believe this is likely to play out based on that price action. And based on the software, monthly, weekly, daily at extreme, based on this technical overlapping price action, we should get a big push lower. And if that doesn't get your attention, let's go back in history. What does this pair do when we have a market crash or a financial crisis? Back in the dot-com bubble burst, it lost 9,200 plus pips. We grinded higher all the way into the next financial crisis. And then what happened? We lost 13,000 plus pips during the 2007 financial crisis. So what is the next one? The Elizabeth, I'm coming to join you, honey, financial crisis. For those of you that liked Fred G. Sanford, a Sanford and Son, Red Fox, He'd get up there, put his hand over his chest and go, Elizabeth, I'm coming to join you, honey. Here comes the big one. So that's what we nicknamed it, whether it's going to be a fiat currency failure. This was the real estate bubble burst. Is it going to be the 5 trillion commercial real estate bubble that burst? What's it going to be? What's going to cause it? All that 38 trillion in debt, all these other scenarios, the market's due for a big correction. And when the market corrects, typically risk on, risk off. Markets are going higher, risk on, so they allow this to climb. Then when the markets start tumbling, risk off, it plummets. So what did these all have in common? Monthly, weekly, daily, extremely overbought. Monthly, weekly, daily, extremely overbought. What are we now? Monthly, weekly, daily, extremely overbought. So I can't tell you what to do, but that's my strategy, is to get to a position on these and stay with it. And don't worry that when I get in, like I was saying here, that little move down, the daily turned over, we got in, made a few hundred pips, got pipped out. Then we made a few hundred pips, got pipped out. Even in the last week, made about 100 or so pips and got pipped out again. So I'm looking to establish that side position going down, because this technical picture says we're due for a big move, at least to go down and visit at 180. Amen? So if we can time it where the markets go into the big correction, it's supposed to happen in 2026, but we shall see. Even with the retracement, when the market starts retracing, we get these big dips down, right? Going into April of this year, the tariff talk, this thing plummeted from 195 down to 184. Over 1,000 pips during the tariff talk when the markets kind of pull back. So every time our markets pull back, risk on, risk off. Got the picture. So is this the end and this is topping out? Possibly. Could it continue this grind a little higher? Possibly also. But that's why when I get the software in a position to where I see this happening, monthly, weekly, dailies, all at extremes, when do I sell? You can go in here and ready to trade mode, waiting for the trigger to fire. And right there is a take profit trigger to the upside, telling you, if you're long this, you better be getting out. Notice how when those start firing, you get corrections. They start firing, you get corrections. They start firing, you get corrections. So be careful that this is not something I want to buy the bound yen at this level and expect it's going breaking higher. It could, anything's possible. But when this baby starts hooking and we get a trigger short, I'm going to get back into a position of authority and be in that position of authority. Got it? And expect at some point we're going to get that bigger correction. And the same thing with the euro yen. Basically, we did the same thing. This thing is just grinding. So with the monthly, weekly, and daily, this is not the time you want to go long. Time to go long was when we were extremely oversold on dailies, weeklies, and monthlies. Right? Depends if you're just scalping this weekly here, set up that last big run. We had a weekly oversold, we had a daily oversold, the monthly was near slingshotting at that point, but it came down. Say it. I can tell you what the software looks like. Paint that Picasso, even though I'm not looking at it. I can tell you what it looks like. Been trading this for many, many years, and as you well know. So Emil, is this the end of that run? Well, typically when you get a monthly, weekly, and daily overbought, you do get pullbacks. It doesn't mean it's the market crash style and it's going to go down tens of thousands of pips. But just getting the time frames in alignment, they start hooking on the lower time frame, you do make those hundreds of pips. And even this recent move off of this monthly, what did we do? We went from, and I'll use my crosshair, we went from this upper high of about 175 and we went down to 154. 2,000 pips. When what? Monthly, weekly, daily started to turn. Even on this shorter one, you think, well, there was one right there. Doesn't look like much, but again, this baby went from like 164 down to 153, over 1,000 pips. So I think you kind of get the drift. That yes, it could dip and rip some more, but we're definitely looking for a dip and get to that position of authority. All right, there you have it. So let's continue. We did get some economic news. I have it on this platform. I have one of them open. Let's see. Economic news. And let me refresh this. Some of these are a little bit delayed, but GDP came out very nicely. GDP came out better than expected. Quarter over quarter, annual consensus 3.2. We got a 4.3. Smash that one. Personal consumption expenditures, annual rate 2.7, coming out at 3.5. So GDP appears to be strong. Go back when the tariffs are going to cause inflation to go high. Inflation is going to be out of control because of tariffs. And they warned you and threatened, and everything's going to be horrible. Well, inflation made a low of 2.7, and it's not. The tariffs are not making inflation go out of control. Who could have thought? Who could have anticipated that? But GDP is pretty strong, much stronger than the critics said. They were nowhere near expecting to get anywhere near 4%. Now, as the second month in a row, we're starting to see with 3.8 revised, but around that 4%, now we're reiterating it. Interesting. I digress, but is this enough to get the market stirred up? Well, it's kind of just the opposite. That looking at price action on our markets, I'm still looking for a bigger correction at some point. The Elizabeth, I'm coming to join you, honey, is likely going to come around and visit. And is it going to happen now, later? We talked about this bubble hunt where we're likely going to grind up towards that 7,000, maybe 7,200. Be careful during this time, Harold, James, Ian, Mr. Tucson, because we have low liquidity, meaning people are taking holidays off. There's not that much volume out there, but ES likes to grind higher in those low liquidity. The bulls tend to like just grind higher during the low liquidity, but be careful. We're a little bit disadvantaged here. Notice how on this recent pullback, ES is breaking out. So likely we're going to grind towards 69.50, which is what, 9 more points, 8.5 more points. So this is likely we're going to grind toward that 69.50, maybe 69.60 area, and that low liquidity kind of grind. But notice how on ES, from that recent lower high to this pullback, we are breaking above. Notice the cash index. We're not. See it? On the cash index, we're not breaking to new highs yet. So we have a divergence between the cash and the futures. And typically, this does not stay that way very long. And how do we typically resolve the discrepancies? You typically get bigger pullbacks. So I would be very cautious, even though we're grinding higher typically as we have low liquidity in the holiday trading cycles. We have 6 days left to this year. Can we break to all-time highs again? Maybe, maybe not. But for now, there is caution in the wind because we have lower highs we're still holding on to, right? And that's the cash index. And even ES, even though it did break this high on the futures, it still hasn't taken out the all-time high. So that may need a little push lower. And guess what this price action is reminding of? I told you this like a month or so ago. We kind of look back at it. This reminds of the 2021 end of the year where we slightly made a new all-time high, and then we went into 2022 and had pretty much the whole year of a pullback, like 8 months of a pullback. So let me scroll back there and I'll show you what I'm talking about. This looks eerily the same when you go back into 2021. It's going to take me a minute to pull back that far, but it is interesting looking at that as we went in from 21 into 2022. So we were coming into 2021. We kind of got this pullback, and then we got the last push, and into the end of the year, very start of the next year, we then started big correction. So this price action, and I could do it on a weekly, a little bit bigger time frame to show it a little bit easier, but back into that 2021, going into 2022, right there, this price action off the weekly kind of looks similar to what SPX is currently doing. We got a pullback, grind, one last pop into Santa Claus rally to the end of the year. And then what happened? Slight higher high, and then we broke down. Is this what's going to repeat going into 26? So let me take all these lines off. They're everywhere, just so you can see a clean chart. But it looks eerily the same. Prices and patterns tend to repeat in the marketplace. Not a guarantee, and it's not always exactly the exact same. But this does look eerily the same, where we just go on a big rip, we get a correction, we get a little blow off top, and then we get that bigger correction going into next year, right? So be careful. Again, we probably going to go on and make new highs that blow off top. Is it going to be into December, or do we need a correction first? Then we get the blow off top in maybe first quarter. We talked about this bubble hunting for months and months and months and months. We talked about it, and I have it on the ES chart, but we talked about it for a very long time, that at some point, likely toward the end of the year, maybe first quarter of next year, we're going to get the blow off top, and then we're going to get a big correction. That is written in stone, in my humble opinion. Emil, I don't care if this thing just keeps grinding the next 6 days and we do make all-time highs, or we even grind up here into the bubble. Then I'm looking for a correction, whether we get the correction first, then we get the bubble hunt into first quarter, then we do it, or we just grind up there. Now we're going to get it once we get up into this 27,000 range for NASDAQ, the 7,000, 7,200 range for ES and S&P 500, I'm looking for a bigger correction. Fair enough. That's what we've been talking about. We're still looking for it. And the reason I'm showing caution right now is, yes, typically we get this slow grind higher during these low liquidity periods where the bulls just kind of push price a little bit higher. But again, this one did break above that prior swing point where the cash index has not. Said that high to this low, we did break above it. We're still below the all-time high, so we're still in danger zone of a correction. And I don't mean the Elizabeth, I'm coming to join you, honey, just yet, because I still think we're going to go bubble hunting. NASDAQ's pretty much the same. We have even more so for this one, that ES broke above in the futures, but the futures on NASDAQ did not. See it? We did not break the high, kind of like SPX, we didn't break the high yet, but ES did. Now look at NQX. It's even more so, showing lower high and struggling. So this is why when I see this type of price action right now, even though I still think clearly we're going to break all-time highs at some point. Is it going to be over the next 6 days? Typically it wants to grind a little higher, but this is also setting up a bigger retracement to then go up to those all-time high bubble hunting moves. Amen. So notice NASDAQ, both the cash and the futures are at a lower high off of that swing point. ES, on the other hand, is at a higher high, still below all-time high, but that recent pullback, it's making a new high where its counterpart, cash version, is still at a lower high. So that's what the divergence I'm talking about. And typically that resolves itself by a down move, a downward a downward correction. So could this thing grind up to all-time highs and then we get it? Either way you slice it. We get the 7,000, 7,200 range in ES. When NASDAQ is at 27,000, that bubble, Dow's up at around 50,000 area. And then the Nikkei we talk about is global liquidity. It's up in this 53 to 54, a higher zone, bubble hunting. When all these come together, that's when we're going to get the bigger correction. So I'm going to have you mentally, physically, and spiritually prepared when that does come. But just be careful in the short term during the next 6 days of low liquidity. Typically, this grinds higher, but this price action is warning a correction before we probably get to our bubble, right? Everybody good? Even on the global liquidity. We might need one more flush and then go into the end of the year, first quarter, we get that blow off top. Fair enough? But it is what it is, especially from the recent high to low, looking at global liquidity. We tested the resistance zone, failed, tested, failed. Now we're bouncing off support, back to resistance. So until we clear this hurdle, then by all means, I think we're going up here. The question is this need a bigger A, B, and this is going to be the C down to then get it? So that's why I'm saying if you're trading this to the upside, I would be in a position of authority on this, even though I definitely think we're going to go up here, we probably still need that correction. And let's go to the software and say, okay, Mr. Software, what do you think about this scenario? How are you lining up? And even the software is kind of reiterating the similar picture. You come over to S&P, and we're slingshotting back up on that daily. My daily's getting nearer in overbought territory. We were. That was part of that correction early. I thought it would go a little bit deeper. I really wanted to see it go deeper first, but we didn't quite get it. We got a shallow correction, but that doesn't mean because we got a little bit shallower correction that that's the end of it and this baby's ready to go blasting off. For the bubble, we still, because we're still at a lower high, all-time high, we can get the daily to turn over and get that correction first. That's why I want you to be very cautious. Weekly's overbought and monthly is overbought. So this is a reason I'm looking for the bigger Elizabeth, I'm coming to join you, honey. Every time we get a monthly, weekly, and daily in these extreme conditions, we typically get a bigger pullback. Even on this smaller one, we ended up slingshotting higher, but that was a nice little dip in this before we went breaking out again. And that was the plan, keep stair-stepping up to that 7,000, maybe 7,200, then yet another bigger retracement. But there you have it. Monthly, weekly, and daily all sound similar pictures. That's not the time when I start going, well, I'm going to load the boat for this thing to go up to 7,200. I'll make my couple of hundred points and I'm good to go, right? Yeah, we're good to go. Let's go ahead and do it. I'm very leery about this. And even now, 1 hour daily still up, 4 hours at extreme. So yes, we might get this grind higher as low liquidity is lying because of the holidays and lack of, follow through. Most big traders are off taking their holiday time. And this is why I wanted to give you a big GMF on this to give us the opportunity to kind of know what the markets are likely to do. So I'd be very cautious that yes, typically we kind of drift higher, but this is still setting up a bigger correction. Probably before we go reaching for the bubble hunt, and that is up here at 7,072 on this Nikkei. We're talking 53 up to 55 area, 52 and change up to 55 area. So is this likely going to get us one more push? Then that this price action does not overwhelm me to say that, yeah, this is definitely the breakout. We're going. Technically, we're definitely going to get up here, but do we need a correction further? Because this one did go toward the 618786, but I was looking for this to be the A, the B, and the C. Then we would do it. So let's see if this is all we needed, and this is the breakout, or is this the bigger picture where that move was the A? This move up is the little a, little b, and this last little move is going to be the little c, which is the bigger B. Then we get the C before we actually get to the bubble hunt. So with these lower highs, right? Lower highs, lower highs, lower highs. This still is cautionary because we could easily get another push lower, making a new swing point low, getting that deeper retracement before we then go bubble hunting. And all that's the same on all these markets. ES is the one that's breaching the system where we did break out. We're not at a new high. But do we have enough liquidity and enough push to get us way up into 7,000, 7,200? I mean, that's still 50 something, 56 pips, 55 pips to go, points. So in closing on ES, even though the futures broke this high and still below the all-time high, the SPX cash version is not at breaking this high, nor at all-time highs. And NASDAQ is even worse, right? We're nowhere near all-time highs, and we're much lower than testing the previous, where ES is breaking that high. NASDAQ is not. The SPX, the cash version of the S&P, is not. And then both versions, NQ for the cash or NQX, you can look at, like I did a moment ago. These are stating a very different scenario, that we still got lower highs. This price action is corrective overlapping, so we probably need the flush. So Emil, that's why I think we're definitely going bubble hunting. So I don't have it on this chart, but the bubble hunt's going to be up here in the 27,000 range up here. So let's put one like this, and let's open this thing. Somewhere in that 27,000 and higher. So I still think we're definitely going to go bubble hunting, even if you're looking at the NDX right there. And what? The question is, do we need a correction first before getting there? I'm not convinced with this price action, lower highs, that this is very bullish to do this right now. Even though I'm extremely confident and high probability, we're ultimately going to get up here. So do we need the 2021 scenario where we kind of top out at the end of the year, then we get the correction before doing the bubble hunt? So we could have one of those where we get a much more pronounced correction before we bubble hunt. Or do we just keep grinding, get to the bubble, then the much bigger? Definitely think we're going to get up here. Once we get to the bubbles, we're definitely going to get a bigger correction. Got it? And I don't just mean NDX. I'm talking about all of them. We get to the bubbles on ES, we're going to get a bigger correction. If we match each other, where NASDAQ is in the bubble, S&P's in the bubble, Dow's in the bubble, Nikkei's in the bubble, and then we're all looking for that much bigger correction. Is it the Elizabeth, I'm coming to join you, honey? Maybe. We shall see. But nonetheless, big correction is coming. Be prepared mentally, physically, and spiritually, because it is coming. Do we grind up there first and get it? Do we get a bigger correction first and get it? I was looking for this guy to go lower, at least into this zone. If not, the bigger picture being the A, the B, and the C, coming even a little bit back toward the Magic Fibo before we get up there. That was the original plan. Remember those arrows I drew? We were going to grind higher. We're going to have a pullback. We would grind higher, and then we'd get a pullback. Then we'd finally get up there. Well, we kind of did it. This. I thought this would be deeper first before we did it. But now this overlapping lower high trend line, this is not real bullish. I don't feel real warm and fuzzy that this maneuver is setting up the bubble pop right now. We may need a bigger correction and even maybe down here before we actually get that. So what am I telling you? If you're long and you're up these points, be in a position of authority. Be quick to take profits and be in a position of authority. Don't just assume, well, I'm up, I'm just going to let it run. I'm going to get these next few hundred points from 25.7 up to 27. That's another 1,300 points. I'm just going to let it run. I'd be a little bit more selective than that and be in that position of authority. Fair enough? And we didn't look at the Dow, but it's kind of in the same boat. Recent high, recent pullback. We're kind of grinding toward the resistance zone. I do think the Dow is going to get to 50,000 and higher. So I could theoretically move that bubble up a little bit more. That's kind of the plan. But is this the one now, or do we need that bigger breakout? And this too, pop, overlap. I didn't mean to grab those, but you get the point. We had this correction and we're popping. Is this the impulsive A, the B, and we still need the C down before we get up here? Or was that correction enough? This is very shallow off of that initial move. So that's why I'm caution right now. Be careful that this is going to go up here. Yes, highest of highest probability, we will bubble hunt, but do we need a bigger correction first? And this price action is not such that I'm like, oh, it's game on. I think we do need a bigger correction. So be careful. All righty, let's continue. What about Tesla? Tesla's desperately trying to break out. Beautiful. TSLL's desperately trying to break out. So we're probably not going to get the massive surge over the next 6 days. Anything's possible, but into next year, I do think the writing's on the wall. 550, there's so much open interest on call options, heavy millions and millions of dollars pushing 550, 6, 7. There are some insane people spending millions of dollars up in the 900 call options. So is that an omen that we're going to get that big massive pop? The technical picture says we're definitely going up here toward that 550 to 650 zone. That was kind of my expected area. And we're just recently starting to break the highs and testing that right now. So it's just a matter of time. Do we need another little pullback first? Well, if our markets all pull back, I think Tesla's going to pull back a little bit, and maybe that's what it needs. This has taken a lot of energy. The run, consolidation, the run, consolidation, finally got a little pullback. Well, that run is exhausting. And with low liquidity, I can't see this thing popping up here right now. So perhaps we get another little pullback, then we do it. But I still think highest of highest probability, Tesla's going at 600, 550, 650 range. Could we get an obnoxious move higher where all those big money calls are way up there at the 8 and 900 range? Maybe it's part of the extensions further up the food chain. I'd like to see it, yeah, because what is that going to do to our TSLL? It's going to make it rip higher. So for all of those that are in the TSLL, remember back in October, I made a bold statement saying Tesla was due to run to 500. You might consider TSLL, and it went from below $10 up to 41.50. And when we started getting this pullback again, we looked to start saying the same thing. This is setting up for Tesla to make another run. So you might want to get back in and revisit the TSLL ETF 2x leverage. So where do I think we're going? Back when it was in this area, nibbling hard, we talked about it. And after this retracement in the $10 range again, I said, we're at least, even if this is a dud and a shoo-shoo, they call a shoo-shoo is one of those fireworks that just don't fire off. They just kind of go, it doesn't, a little shoo-shoo, whatever you want to call it, a dud, a shoo-shoo. We should at least get into the upper 20s. We're in the low 20s, and I don't think we're done. So Tesla pops the 550, 600, we should be in this zone. What if Tesla goes to 650, 700, 800? We should be in this zone. So we're talking we could have a double still from where we are if Tesla can make the run, right? We could virtually double it just by getting to the shoo-shoo department and the dud department. So am I guaranteeing that we're going to get all the way to 34? I do think we're going to get somewhere between a 28, 34 zone if Tesla gets to 550, 600, which is extremely high probability. Once Tesla, if it can break that and start moving toward that 7, 800 range, then I think it opens the door toward that 4650 range. If Tesla goes insane and pushes toward 900 or 1,000, then I clearly think we're going to be further up, more like the 60s up here. All right? So I have my shares. Again, I can't tell you what to do. I can only tell you what I'm doing. I bought shares. I bought a little bit. I didn't think, uh-oh, I'm underwater. Do I close them? I kept telling them, the lower it goes, add to your position. And the lower this went into the single digits here, that's when I bought more and more and more shares. So cost amortization, dollar cost averaging, we're in at a very low price, below 10, or right around 10. So we more than doubled already. And I'm looking for more, Emil, up here in that 28 to 30. This is extremely high probability. And all Tesla's got to do is get to that 550 area, which is in the books. 75% chance Tesla's going in that 550 area. So when it does, we should be up in this area for its TSLL. And if Tesla can get the big run where it pushes 7, 800, etc., then we're going to start targeting 46 to 50 range, our extensions. And we're not even there yet. Look at that, Emil. That high to that low, we got to get above 28, which is part of the shoo-shoo department, and that's 786. But if Tesla can start pushing 7, 800, I think we'll start closing above the 618 level, 786 zone. And then that gives us a 75% chance we might go visit 46, but that would still take Tesla making a move toward that 8, 900. We should get there. If Tesla goes blowing past, say, 1,000, then we might be up into this bubble area. Amen? Maybe this is when the markets are all bubbling out. NASDAQ is 27,000 higher, Dow up at 50,000 and higher, ES up at 7,000, 7,200, Nikkei up at that 54,000 or higher. Maybe that's what blows everything up. And Tesla does it too. But I'm sitting pretty here, made big money on that, took that earnings to buy this, up big again, looking for more. Amen? All righty. What about black gold Texas tea, the Beverly Hillbillies? Still looking for that flush lower. We're still got these lower highs. So is this the end of that pop? Do we go a little bit higher? Still looking for, is it possible this could be the bottom? We did get a new swing point low off of that low, but we basically tested the prior low. And let me check something. 57.80. No, that's not right. 55.12. And what was this low over here? 54.98. So theoretically, we did get a new swing point low. So it's possible that this is the end of oil prices dip and we're ready to go ripping. But it still looks like we need that last flush. So that's what we've been anticipating for months now, that black gold Texas tea, after all this chopping overlapping, was due for a new swing point low. We're looking to go in the low 50s to upper 40s area, somewhere 50 and lower. That's the bubble hunt. Be careful with this bounce. I still think we're going lower. And when we do, we have a game plan. Everybody knows the game plan, right? Oil goes dipping at 50 and lower, we start buying UCO. That's the leverage product. So why do we want to do that? Because when oil gets down to 50 and lower, we're expecting a violent reaction back toward the upside. Because why? Drill, baby, drill can't survive down at 50 and lower. They need prices to be in the 60s or higher. The sweet spot for oil prices are above 60 and below 90. Why is that a sweet spot? Just listen to the landman and listen to oil reserves and this, that, and the other. That when oil's down here, they can't afford to keep drilling at that low price. They need prices and affordability into the 60s in order to drill. And as it goes too high, above 90, then inflationary pressure hits. All goods and services, etc., go much higher because oil prices, gas prices, diesel prices, everything will be real high when barrels are sitting up here at 90 and higher. And that's in the cards. This bigger picture, Harold, from the high up here to this recent low, which I don't think we made it yet, we're due probably for a 618 retracement. So we can get in the 50s, we could double before we're done. So it could be like one of these. Last time we got in the low mid 50s, we had fireworks and rockets shoot off in the Middle East. And we went from 55 all the way like to 78. Nice pop. Well, now that we're getting even lower, that's the plan. I expect this pop not only get in the mid 60s, but we're due after all of that, we're due logically to make like a 618 type of retracement out of that. Amen? So why do we want to buy UCO when oil prices hit 50 and lower? Because we expect oil is going to then go popping. You can buy USO. It's more expensive at $69, but the plan is for USO follows oil prices down, and then when oil prices pop, it's going to follow it back up. But I like a little more spice in my food, right, Mr. Tucson? A little Louisiana lagniappe, a little something, something extra in there. So this is a leverage product, Ultra Shares. So this thing should do a 2x move, right? So what are we talking? If we can get oil to dip down to 50 and lower, I think there's a good chance we're going to see UCO somewhere in the teens, the lower teens. We're still in the teens right now, but we're targeting 16, 15 area. And if we get that plunge down to say 50 and lower, we might even dip into the lower teens, maybe even out of the teens toward this 11 target. All I can say is I see prices at 15, I'm buying. 14, I'm buying some more. 13, I'm buying some more. 11 down here, buying real good. Anything at, 13 and lower is back to truck up zone, because then I think when oil prices go ripping back into the mid 60s, 70s, maybe pushing toward that 100, this thing is going to go ripping. Amen. So we could be down here in the teens and get up in maybe a double X seems extremely high probability. Maybe a 3X to get up in the mid 40s is not out of the question. So that's why I'm saying watch out. We get oil prices to go soaring again, this thing is going to go ripping with it. Amen. And if you were playing the contrarian view of this, you come out to the daily and we look at SCO. We talked about buying some shares down low, expecting this was going to get up into the 20s, probably even still a little further to go, because as oil prices fall, this baby goes higher. And as oil prices bounce, this goes lower. But the plan is, I don't think oil has bottomed and reversed yet. I do think oil is going to go spilling lower. So when that does it, this SCO inverse, the ultra short, is going to go ripping higher. Amen? So I don't think this was the end of this move yet, because I don't think that low of oil was the end of that low. So as oil makes new lows, pushing toward 50 and lower, this is going to make new highs, pushing us toward the mid 20s, maybe even up toward prior high. All I can say is if you have shares of SCO, be sure you liquidate them when oil prices start hitting 50 or lower. Be sure you liquidate these. And when oil prices are at 50 and lower, you start looking at buying either USO or UCO, because again, oil prices are going to go ripping once they get down into the 50 and lower category. So in closing, we expect oil to keep this grinding, grunting lower. I expect a big dip down into the low 50s, upper 40s, somewhere at 50 and lower. That's kind of the strategic point. And when I hear ding, 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 oil's at 50 and lower, what is my first knee reaction? A, if I have any of SCO, sell, 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 sell. B, when you're down in 50 and lower, look to buy some shares of UCO, or you want to spend higher bucks, go with USO. But I plan on buying some UCO. Amen. And where should that price be? If we can get oil prices to dip into the 50 and lower, so we're talking $8, this thing should drop somewhere into that 14, 13, 12, who knows? But in the teens, certainly. And even though we're in 19, we're in the teens, we still expect it's going to go to the lower teens. Got it? So looking at this chart, when I use the recent high, this recent low to high, we broke the 618786 zone. We're likely going to go dipping towards 16, 75% chance we visit 16, 70 plus we visit 15, and maybe even a little bit deeper, but you got the message, right, Emil? It doesn't matter if it hits 16, do I buy then, or 15? I don't care where it is. When price hits 50 and lower, I'm buying. If it's at 16, great. If it's at 15, better. If it's down here at 12 or 11, even much more better deal. All righty, I think we exhausted that view, but be careful on this bounce because, again, this is not conducive, even though theoretically we got a new swing point low and that could be the end and oil prices are ready to go popping now. I don't think so. I still think we got to get this flush. Amen? All righty. What about gold? There's gold in them there heels. This makes me, again, a bit nervous. I know gold's been on a tear, and I'm still looking, we overdue for correction. Let's see how this candle body closes today. If we get a rejection hammer and it closes red, turn this into a red croquet hammer, then that kind of sets the tone. We're going to get a big push lower. And in my humble opinion, I've been saying it, even though it did break out, but this move down was impulsive. This was overlapping, where the first move up, down, we overlap. When the next pop, we overlap with that area. Then we started breaking out. We reached the extension. This is another reason why I'm like, take some profits if you're short-term trading this. I do think we're going to 5K plus, but I also think we need a much bigger correction first. Amen? I'm the biggest gold bug out there, bull out there, but we still need a correction. And this chopping, overlapping action, even with the extended, even though we made a new high, that's the same thing as what we talked about with some of those other. This can be the A. This move up is the little a. This move down is a little b. This last pop is the little c, making the bigger B. And we still need to come down for the big Charlie. Again, what if I'm wrong? That I'm vested in gold for the long haul, because I definitely think it's going to 5K plus and then some. But 5K plus is the next target. Is this thing just going to keep going up $600 more? Anything's possible. But man, if we do get that pullback, Harold, all I can say is this is a great buying opportunity to look for that move. The biggest opportunity was silver. Last year, I talked about it. Year before, we were desperate and very determined this was going to go to 50 and higher. Remember that conversation? Go back in the archives when we were sitting up here at that prior all-time high around 50 bucks. And then we got the close above that 618. We were likely going to 55.60. I made a bold statement saying that I guarantee silver is going to 60.70. Yes, I wanted a correction first for selfish reasons. The bigger the correction, the further it had to go to get up there. But let me let you think about something. The old relationship between gold and silver was 1 to 15, right? Silver's out there, and gold in the scenario was always 1 to 15. Well, look at gold. Basically at 4,500 bucks when we were topping out right there, 44.50, we were pushing toward at that high right around 45. Do the math, Harold. What is 15 divided by 4,500? So I'll just write it out. 4,500 gold price. And you divide that by 15 for the ratio of 15 to 1, gold to silver. That should be silver sitting at 300 bucks. Huh. Wow, right? So silver still has a tremendous opportunity. And silver sitting at 70 is way different than the 300 where it should be. They were always manipulating the price of this. Industries, everybody uses silver and this, that, chips, that, and the other. And they're always just holding and manipulating price on that. Well, if it does turn out that we go back to that 15 ratio, then this baby, even at 70, is a far cry, right? 300 is much greater than 75 or 70, where we are now. So the opportunity years ago, when we talked about silver last year going into that big run, was a leverage product, AGQ. ProShares Ultra Silver. Look at that monster. It went from the 20s all the way to 160. And what if, William Bruce, James, Ian, we get the 300 price range? Well, if we go from where we are and we go $300 on silver, let me just do it the other way first. We'll go over to silver and we say, okay, price is at 70 and potentially could go to 300. This thing's going to go insane. But you're talking a massive run. Even if we just get up into the 150 range, let me get that one more time. See if I can get that going. And we get to this 150, 160, half of it. What if we go to 300? It's going to be a huge run, obviously. For us to get up 300, you're talking about 300% gain. Well, AGQ, that would put us into the stratosphere, and AGQ would be up, if my memory serves right, somewhere around $1,400. AGQ, Gary, not X. AGQ. So from 160 to 1,400, that's some big numbers, mind-blowing numbers. That would put us about 600+%, right around that 1,400, about 700%, yeah. Right about $1,400 a share from 160. Now, am I not trying to tell you, Harold, that this thing is going to 1,400 a share? But if silver goes back to that 1 to 15 and silver starts ripping to 300, this baby's going to be up at about 1,400. Wow. Interesting. But you go back to where this baby started and look at that run. We're in the 30s up at 160. This is the type of leverage I like using without doing shares as far as options. Options have expirations, there's time decay, there's other things you have to take in consideration. But buying these shares, it can take longer. Because what's the problem with options? Sometimes you don't get the timing just right. And it expires, then this thing goes ripping. But if you own shares of that, then it doesn't matter if it takes 1 month, 6 months, or 2 years, your share price still goes up dramatically. And yes, there's a little fee involved with owning it. Down here, a little expense ratio to own it. But that little expense ratio, if you bought it in the 30s and you're sitting at 160, and you're not worried about that little expense ratio. Amen? All righty. I digress, but I do think silver is going much higher. And if this manipulation of silver prices, they're struggling to do it. Obviously, we're finally getting that breakout. And this is the tip of the iceberg, because if it truly goes to where it should be, this baby should be somewhere around 1,400, and silver should be sitting somewhere around 300. Got it? Not just up here in the 140, 150. So when we were talking about this, and I said, Emil, even if silver tries to catch up with gold, we're pushing the 4.23 up here, 3.6, then silver should at least be similar to that. And that would have us up here in the 140 to 170 range. Well, that's only halfway where it should be. So what's the likelihood this thing could get up to that 140, 150-ish area? And that's still only half of the 115 really. So basically what that means is gold can just sit there and hover around 4,500 and silver could go ripping to 300 just to catch up. Plus quantum computers, chips, AI, everything under the sun is using up silver. The demand is going to be high. All metals are soaring. Exclamation. Palladium. Look at these things, man. Palladium's on a rip. It was down here at 900, sitting up here at 1900. And a lot of these are getting to the point where what if we get those big runs and we start breaking above the 618, then we can talk 3,000, 4,000. What is it? PL, what is that? Futures, platinum. Where's the futures one? PL. One exclamation, is that it? Platinum futures, there it is, PL. Look at platinum. It's about to break the prior high. So this one is already stating we've got a likelihood from that high to this low. We took out the 618, so the likelihood we go to 2,500, 2,700, extremely high probability on platinum. So the metals are finally starting to rip. So not that I'm trying to tell you, go out and buy a bunch of this because it's going to go up, several hundred more dollars. But this is what's happening. And yes, we probably need a correction. So I would not be surprised before we get up there, we might get a little something correction. Or if we go breaking up here, come back and retest the breakout zone, then we go higher in a lot of those. Amen? So any questions on gold and silver? Be careful at these nosebleed section. I would not say going into 26 that I'm just saying this is going to 300, so you better get in now. By next few months, we're going to be sitting up at 300. It could. But after this big run, I think we need a correction. So be careful. Amen? We got to the targets I guaranteed. Now what? Yeah, I do think we're going higher, but I also think we need some sort of correction in the mix. And watch gold carefully. Gold if gold goes plummeting, silver is likely to follow. That's traditionally the way it moves. But you zoom in on this current price action and watch this daily candle. Let's go to the daily. If this thing turns into a hammer, like we're seeing this rejection wick, and this turns red, that's usually a strong sign we're due for a big pullback. So I'm going to keep an eye on today's daily candle. Yes, even without it going red, I still think we're due for a correction. The question is this an expanded flat correction? Because this overlapping price action, even with this run, still looks more like the potential of an A, B, C, B, come back down toward the lows, C. All I can say is if it plays out that way, ladies and gentlemen, I am looking to buy big time, reload, and look for the next push to 5K plus. So what would that look like on silver? I'd love to see silver and use SLV if that's what you want to look at, pushing into the upper stratosphere as well. This thing's getting to the extension, heavy extension. Could this thing just continue to 69 and then 73? Sure, we did say we go to 60, 70. We're at 63. But this takes a lot of energy to keep running. Would not be surprised where we broke out from to see us come back to retest that before we then continue. So the same rule kind of applies. Watch this daily candle. Do we get some sort of doji? Or I'm watching that closely. Yes, I did say silver was one of the better investments coming into this year, but I'm not convinced straight off into next year. It's just going to continue this insane pace. I think it needs a correction first. And all I can say is if we get a correction down to where we broke out from, that's a good opportunity to buy that dip. Amen? All righty. Let's continue. What about Bitcoin? Nervous Nelly on this. The writing, are we going to get the blow off top? We're going to go to all-time highs and higher? Or was this the end and we're going into crypto winter? Not convinced the signs are there, but here's what I'm looking at, Harold. Let me zoom that in on current price action. This latest pullback. We talked about that coming into the last quarter of the year that we would do. Probably going to see this thing go below 100,000 to make everybody nervous and freak out. Well, the technical picture now, we got to thread the needle in order for us to go breaking above and do all-time highs again. We have to close above 108, above the Magic Fibo. It's sitting down here at about 101, 101.7 area. You can see that black numbers over here represents our Magic Fibo. Definitely got to get above that. That starts to feel bullish. Then we start closing above 108 up here, which from the high to that low would mean we have a 75% chance we go on to make new highs, 132, 70 plus 138. What's to the downside? If we take out this swing point low, that's warning number one. Well, actually, we can do it this way. Let me stretch this out. Let you see that up close. Based on this, up, retrace, up, retrace, up. If we start taking out that swing point low, that's your first warning. Your first confirmation is going to be, so we take this low out, that's your first warning. Uh-oh. We break that low, that's your first confirmation. We take out this green line low, then this is likely giving us about an 85% chance we take that low out. We're going down about 74 to 70,000. Say that again. If price comes down and we take that low out, we have about an 85% chance we're going to visit 70 to 75 level. Got it? 70 to 75,000. I should put a K in there so you know that's K. So we take that low out. We have probably as much as an 85 or more percent. I'd go about 85%. Take that low out, we have 85%. We're going down to 70, 75. The high end of there, we'd go to 75. The low end down to 70. Everybody with me? So as long as we hold above that low, okay. Above that low, better. And above that low, is a must. So if we're not that far from, we start breaking this low, that's my first warning. Uh-oh, likely going to start moving lower. This is my first confirmation of that. We take out that low. And then Houston, I think, is over. If we take the 80 low out, then we now shift gears to an 85% chance we're going to plummet down to 70, 75. How cool is that? But not that cool if you want Bitcoin to break out all-time highs again, but it could be setting the stage for the crypto winners coming in. Just to review high level, those of you that trade trade crypto or not, every 4 years, Bitcoin has a halving. Our most recent halving was in April of 24. Next halving is roughly April, May of 28. And you can see the blue lines are the halvings. We had 1, 2, 3, 4. We're about to go into the 5th one in 28. But the plan is with Bitcoin, every post halving, you get a 12 to 18 month run. You get a crypto winter low. You start ramping into the next halving, 12 to 18 month run. Then you get a crypto winter low. You start grinding into the next halving, 12 to 18 month run. Crypto winter low. Start grinding into the next halving, 12 to 18 month run. Crypto winter low into the next halving. So, Emil, if this is the end, we start taking out 80, we go down to 70, 75. I would expect that, let's just be devil's advocate here. And we say, okay, yeah, it's going to do that. And it's probably going to mean we have topped out and Bitcoin is done for this year, this cycle, this crypto cycle. And we do something like that. We take the warning shot, we get confirmation, we break below that, we head down at 75 to 70,000 range. I still expect a decent bounce before we go lower to our nibble zone, right? So be careful with this. This could pop, we can still get it and still go all-time highs, but we have to stay above that 80. That is absolutely critical. But I'm just going to throw that out there. If we do get below this 80, 85% chance we go into 70,000/75,000. And once we get down there, I would expect some sort of little 3-wave correction to then set the tone. We're going lower for our nibber zone into late 2026, maybe early 27. Bottom line, that's where it stands. Take the low out, we're going lower. And even if we go lower, I'm looking for a bounce, not a breakout to all-time highs, but a bounce to a lower high. Then the last thrust into 2026, maybe early 27. We bottom somewhere around this 50 to 30,000. All I can say is the same tune. We get to 50,000 and lower in late 2026, early 27. That's a perfect time to buy the daylights out of Bitcoin, like we tooted the horn numerous times when Bitcoin was below 20,000 in 2022. I kept saying, man, if you don't buy this, you're going to be regretting it. And went from below 20 all the way up to 126, whatever that top was. So far, 126 and change. So that was quite the move. Is this over? Well, I keep referring you back to this. We had a big 54% decline that happened the last cycle, and we still went on to make all-time highs. This latest correction was not as deep as 54%. It was only in, was it like 33%? I think I took that off. It was on my chart, but I can do that real quick for you and show you it's less than 54, that correction we've had. So the recent all-time high, and you use this little tool here, the recent all-time high right there, down to this recent 80 low, it's only about a 36% decline. Where the last halving cycle, we actually did a 54%. And I remember in this time frame, people thought the same thing. It's doom and gloom. We're going to zero. It's a scam. All this other. And we still got that last pop. So price has to prove it. Well, check it out. When we got that low down here, we just kind of grinded for a while. And then we went up. So what are we doing since that low? We're just kind of grinding. So this still leads to potentially all-time highs again. But that's why this swing point low is critical. Amen? I think that'll sum it up for you. Critical that we hold. Ethereum kind of in the same boat. If we go on, and I'll go back to the daily to show you different swing points. Come back to the daily, stretch that out for you. But it's the same kind of scenario. We have a low, higher low, higher low, and this chopping overlapping does not give me warm and fuzzies right now, but it could be a nested 1, 2, 1, 2, and we're getting ready to go blasting off. But if not, and we take out that low, then my first confirmation is going to be when I then take this low out. So we take this low out, followed by that low. First confirmation, we take out this swing point low. Then highest probability, we're going to go dipping down toward the extensions. What would that look like? Use your 2.2, and you go from, use the control key, that swing point low up to that swing point high. We're kind of holding the 618. We did it on that one, extreme, but held it. And now we're doing it again, so far holding it. But if we break below those, then we're talking down here in the 25, 2400 range. So let me put this little zone here. If we take this low, first warning sign, this is no bueno, take that low out. We continue to take that low out, first confirmation, take that low out, we're going to drop a couple $100 into about that $2,400 range. Amen? So Bitcoin would go down to 70, 75,000 range, and Ethereum would go down to like 25, 2,400 range. Everybody with me? And I didn't show you that on Bitcoin, but it's the same. If you look at the recent structure, and I'm going to remove this guy just because it's in the way. But if you look at the recent swing point low up to the swing point high, that puts us right in that high. Let me see, I got that high. Something didn't work out right there. Wait a minute. That's not right. Oh, that's the 3.2. Remove that. That's the problem. Let me get a few of these out of here. But you use the 2.2 from that low up to that high. That puts us in the break the low. We're coming down to this 75 to 72. I said 70, 75, but that kind of puts us in that same category. Everybody good? So again, you take that low out, 85% chance we're going 70, 75. Ethereum, you take out this low, 70, 85 plus percent, we're going down to 24, 2,500. And even if that worst case scenario happens, where we break the low and we go dipping, I'm still looking for some sort of correction before we continue in the crypto winter push lower. It's not over. We still could go breaking out. Still got a bigger chance as long as we hold these lows and price finally starts getting what? Above the Magic Fibo. And then from the recent high to the current low, what do we need to do? We need to get above 4,000. So if we can start ripping another 1,000 points, get above 4,000, then we stand pushing for 55, 6,000 range. Any questions on that? So there you have it. So circle the wagons, as this is the only class this week because of the holiday session. I mentioned at the beginning of the class, if you weren't there, my computer, I worked with Microsoft to reinstall Windows. It didn't fix the issue. I'm thankful that this was able to do class today and didn't crash on us so far. Pretty much, we've done it. Hooray. But it looks like I haven't escalated my issue with Microsoft for Windows because it didn't work out. Still got some corrupt files and other things they can't figure out why it didn't change and help. And also, I think I got some memory issues. So I'm going to have that sent back to the memory manufacturer. And unfortunately, you got to send them the memory, then they send you back new ones, and that takes days. So the plan is still to have class next Tuesday and then into the first of the year, normal schedule. But hopefully we can get all this resolved and we can get this back, because I don't like being in class for you guys and then all of a sudden it crashes multiple times during. It's a lot of work for us on our end because we got to take snippets and pieces of recording, put it all together and try to make it into a flawless execution. But I digress. But let's circle the wagons. A, be careful with this grind higher. That is the plan. I do think we're going bubble hunting. We're just kind of grinding. Probably going to go visit, what did I say at the beginning of class, 69.50. That's the target. We're already reaching it. Can we go a little higher, maybe 69.69? This is kind of what it does in these low liquidity times. It just kind of just grinds higher during low liquidity. But all this price action, especially with ES breaking out, but SPX not breaking out to new highs yet, nor all-time highs, and NASDAQ being nowhere near all-time highs and previous highs. So this is kind of a omen maybe that we need a correction first before we go bubble hunting. Got it? You can see NASDAQ the same way. We didn't break the prior swing point here like ES has done. SPX didn't do it, so we got a little discrepancy, divergence between the cash index and the futures. And typically when you see that, it will work itself out and resolve it. How does it normally do it? With a push lower, right? The question is, do we grind to the bubble, then get it, or do we get it, then go bubble hunting? I'm still leaning with these NASDAQ, etc., all showing lower highs and struggling, that we probably need another push lower before we go bubble hunting. But either way, once we get to the bubble and everybody's bubbling it, meaning ES is in the bubble, NASDAQ is in the bubble, Dow Jones is in the bubble, Nikkei's in the bubble, then we're expecting a big correction. Is it the Elizabeth, I'm coming to join you? That's out there. But it should be a substantial retracement regardless, right? And those of you that were keeping score, we went back in time. I'll do it on a weekly chart, but I did it on a daily. And this price action is looking awfully similar to what happened as we went into the end of 21, hitting in 2022. We were on this insane run up, did an all-time high right at the end of the year, going into the very beginning of the new year, and then boom, we got a pretty big substantial correction that took months. So upwards of that high down to that low. And let me kind of move this up so you can see that. That was upwards of about a 28% decline from the high to the low. And it roughly went from the beginning of the year into that low until October. So the majority of the year, and we finally got that big Santa Claus run toward the end of the year. But that might be what's in store in 2026, at least. This would not be considered Elizabeth, I'm coming to join you, honey scenario, but it's going to be a substantial correction. And this price action looks similar to what we're doing now. big run. We got a correction, a big run, last little dip and rip. We got the correction, a big run, little dip and rip, and then what? Boom. So this is why I'm saying be cautious up here. I'd like to see the dip first, then the bubble hunt, then the big one. But this is what I'm at least expecting, something in that nature, if not the much bigger one, where we get all the way down into the 3,500 or lower. Where does that come from? Go from the monthly, and that would be from that 2009 financial crisis bottom up to the current high, which that's got to be moved just slightly. See if I can grab it. Because we're at a little bit higher high, but it doesn't really change the price too much. Somewhere around that Magic Fibo / 618 retracement. That's what the big one would look like. We get a big type of move down. If not, then we look for some sort of similar type of correction where we come down substantially and then we go back up. All right, we'll guide you when we get there, but in the short term, be careful to the upside. We're talking today, the rest of this week, and we got 6 days left till the end of the year. That typically low liquidity, it grinds higher. But be careful, because whether it's the beginning of the year we get the pullback before we go bubble popping, I'm just not convinced this low grind liquidity, we're going to go up 200, 300, 400 points during that low grind liquidity over the next 6 days. So be sure you're in a position of authority and be ready for some pullback sooner than later, but no later than later. And in my humble opinion, based on looking at all of them, ES still at lower all-time highs, but just broke out above the prior swing point. SPX still at lower highs, hadn't broken out the prior swing point just yet. NASDAQ in the same boat, hadn't broke the prior high, much less all-time highs. All that sets up, we probably need one more flush before we get to bubble country. But either way, we keep going or whatever. When everybody's up in the bubbles, we're looking for that bigger correction. At least what we went back in that SPX example, somewhere around that 20+% decline. That would be what we're looking for at least. If it turns in, Elizabeth, I'm coming to join you, honey, then we're talking substantially lower. Amen? All righty. And don't forget about the dollar index. The plan is this thing to eventually keep breaking down. Are we going to break to new lows before the end of the year? Anything's possible, but low liquidity kind of says we're probably just kind of chop and grind, maybe drift a little lower, but the plan is to go make new lows. So all of that means the dollar grinds lower. That means my trades like the euro dollar, pound dollar continue to grind higher. So that is the plan. Just keep buying the dips, letting us grind higher. Again, we went over this, but we're looking at getting somewhere around 800 pips by the time we reach our targets. And what are those targets? That's when we get down and make new swing point lows on the dollar index. Our targets for those pairs like euro dollar going to be up here at that 119.80, 120.30 and higher. Pound dollar is going to be up at that 139, 140, even though we haven't officially reached our shorter term target, 35.30, 3600, but writing's on the wall from the recent high to low. We're about to take out that 618. Amen. And we close above that. Then that's when we start targeting 139, 140. Why do I feel confident we're going there? Because from this recent high to low, we already have done it, and we're almost reaching the extensions now. And those two extensions we're getting closer to, or what? Above the 618. Then we focus up there. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. I hope you and your family and everyone has a Merry Christmas and a Happy New Year. God bless you. We love and appreciate you. And remember, no class tomorrow or Thursday. We'll try to do this again next Tuesday, and we'll keep you abreast of my technology crisis. But so far, so good. I did a lot of work over the weekend, did tests and this, that, and the other, and spoke with Microsoft support. And we're on that with that guy for God knows hours and hours. So far, so good. It made this class. Hopefully, I'll do the next. But once I get my new memory in and then we get the new install in, I think it will be golden. So your thoughts and prayers are greatly appreciated. With that, take care. God bless you. Have a great Christmas and a New Year. Well, Christmas anyway. We'll talk to you before New Year. Take care. God bless you. That's it. That's all. We'll see you next Tuesday.